Hello and welcome to this week's LOLC Securities Weekly Market Roundup. I am Tarandu Amalasekara.
And I am Nigara Vijayamana. This is the sound of profitability. The Central Bank of Sri Lanka announced in December 2024 it successfully renewed the bilateral currency swap with the People's Bank of China for another 3 years.
The Chinese yen 10 billion, which is approximately $1.4 billion, currency swap facility reflects the financial cooperation between China and Sri Lanka. This move was under the terms and conditions stipulated in the original agreement.
Sri Lankan activities of the services sector surged in December, mainly helped by the tourism sector and the festive seasonal activities. This is according to the data from the Purchasing Managers Index published by the Central Bank.
The Purchasing Managers Index for services surged to 71.1 in December from 60.5 in November, indicating an expansion of activities. The notable expansion in business activities was driven by the improvements observed across most of the sectors. New businesses increased in December 2024 with financial services, wholesale and retail trade and other personal service activities expanding.
Sri Lanka has recorded a balance of payments surplus of $2,912 million as at November 2024, which is higher than $1,908 million a year ago.
As central bank data showed, the BOP surplus increased by $87.6 million in November after a steep rise in the previous month amid official flows. Sri Lanka's central bank has been following a broadly deflationary policy, allowing the BOP to be in surplus, though warnings were issued that inflationary operations were starting around October.
And now it's time for the corporate highlights of the week.
Sri Lanka has signed an agreement with the Chinese International Petroleum Corporation, who will invest $3.7 billion in a state-of-the-art oil refinery with a capacity of 200,000 barrels to be constructed in Hambantota.
According to Minister of Transport, Highways, Ports and Civil Aviation Bimal Ratnayaka, a substantial portion of the refinery's output is planned for export, further enhancing the nation's foreign exchange earnings. This major investment from China is expected to bolster Sri Lanka's economic growth while uplifting the livelihoods of low-income communities in the Hambantota area.
Sri Lanka's DFCC Bank PLC has announced that it will sell its 50% stake in Equity Partners to HNB PLC.
The transfer of 50% stake held by DFCC Bank PLC in Equity Partners Private Limited in the name of HNB will take place upon the receipt of the respective approval of the regulators. Equity Partners is a joint venture between HNB and DFCC Bank.
Vietnam's ambassador to Sri Lanka, Trinh Thi Tam, visited Haley's Group in a bid to boost economic cooperation between the two countries. It is worth noting that the annual bilateral trade between the two countries was around $300 million.
During a meeting with Haley's officials, which was led by Chairman Mohan Panditage, they provided an in-depth briefing on the group, including its existing ties with Vietnam. Ambassador Trinh Thi Tam had briefed Haley's on Vietnam's interest in expanding economic cooperation with South Asian countries, including Sri Lanka. Haley's has a number of Vietnam partners in areas of trade, tourism, agriculture, engineering, transport, and logistics. The Haley's team is interested in tapping into Vietnam's growing market.
Here is Taridu with the ESG update of the week.
Green finance is getting the attention and traction among the financial services providers of Sri Lanka. This is based on a survey done by a policy think tank among 20 financial institutions. As per the results, over the next decade, more than 25% of the portfolio of these institutions is expected to be based on green finance.
Banks and finance companies see it as a new area for lending, and the number of potential projects that need finance keep growing. according to the Green Finance Maturity Assessment 2024 report from the Center for a Smart Future. The survey showed that there is strong strategic recognition at board and senior management level, with many financial institutions having a board-approved policy or other form of internal guidelines. Majority of financial institutions say that over the next 10 years, they anticipate up to 25% of their lending portfolio will be projects that utilize green finance. According to the survey, the lack of knowledge on environmental issues was cited as a top challenge by financial institutions in assessing green credit proposals.
And now, time for the international highlight.
Hindenburg Research, the research and investment firm which is known for betting against certain organizations such as the Adani Group of India, also known as short selling, has officially announced that they are closing the investment firm, and this is according to a statement by its founder which it has published on social media. Nate Anderson founded the New York City-based firm in 2017. There was no single reason for the decision, but running the company had been tense and at times all-encompassing, according to the social media statement. Anderson said the plan had been to disband the firm after finishing the pipeline of ideas he and his team had been working on. The firm profited from its research by borrowing shares of targeted companies in the expectation that their prices would drop. This is a practice known as short selling. The company wiped billions of dollars off the market of valued companies, including the Adani Group. It was accused of perpetrating decades of stock manipulation and accounting fraud, accusations for which Adani had been giving responses at different times. That's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will see you next week.